Hello, everyone. I'm Katie Lovewell. I'm here with Louise Lovewell and our trusted loan agent that we highly recommend, Bill Jarvis, to give us an update on what is happening with interest rates right now. So, Bill, I'm going to turn it over to you to tell us what's going on.
All right. Well, we were just discussing the rates late last year. We're up around 8%. They were trending down pretty well, and we were looking like maybe by the end of the year we'd be in the high fives, was kind of my hope, and a lot of people thought that was where we were headed. The Fed was supposed to cut rates a few more times this year, or was expected to. Looks like had looked like inflation was getting under control. That has changed. So the Fed is now less likely to change rates or lower rates, at least for the next several months. So we've gone from, rates went from 8 late last year to under 7, maybe as low as 6.5 earlier this year. Just in this last week or so, we're coming real close back up to 7% on the 30-year fixed. We're maybe a hair under that, but it seems like 7 is coming. I still think that by the end of the year, we'll be back at least below 6.5, but it's going to be slower than expected. And so many crazy things in the world, who knows? It could, with these wars and elections and whatever, that could all change real quickly. But for now, we're real close to 7%. And that's on a conventional. FHA is still a little bit lower, VA is lower, and seems like we're trending very slightly up in the very short term, and hopefully slightly down by the end of summer.
And there's still the California Dream program that's still happening.
That is still happening. That's a lottery. If you're interested in that, we should get that going pretty soon. They're totally different this year. They're doing a lottery for that. So it's early April. We need to be kind of in line probably within 3 weeks or so to be ready to get drawn for that lottery. Last year it was just kind of a disaster. You made your offer and hoped you got the California Dream Loan. This time it's different. You're kind of pre-approved, and then you hopefully, if you win the lottery, you get a slot, and you have several months to go out and look for a house. So it makes a lot more sense than last time. But that is on track, and they have a pretty decent amount of money. So I'm sure it's going to, all go that one day. So if you don't get in line in the next 3 to 4 weeks at the most, you're going to be out of luck for 2024.
All right.
And I have no idea what the odds of winning. It's probably going to be kind of a long shot, but it's a fantastic deal. So the big change with that one this year, you have to be a first-time buyer only, and you have to be a first-generation home buyer. So if your parents owned a house, you are not eligible. So that's a very big change. The interesting thing, if you haven't owned a house yourself for 7 years, you are considered a first-time home buyer again. But if your parents owned a house ever, apparently, you're out. So we'll see how that all shakes out. So that will limit the pool quite a bit. So the people who fit that criteria probably have a better chance than they would have if they didn't have that.
All right.
We'll see. I have a few people lined up, and hopefully we'll have some more. I'm sorry?
That's a big thing if your parents owned a house. I mean, that would limit a lot of people.
First generation home buyer is what they're looking for this time now.
Hmm.
But the income requirements you can do pretty well. So don't be scared if you're making, over 150,000 even. If you have a family that, if you have I think it's up to like a family of 4 is $200 and something thousand a year income, and you can still qualify for this program. So it isn't just for, I think when it was kind of sold as a low income thing, and it's really not this time.
All right. Well, thank you.
In 3 weeks, 3 weeks.
Well, the lottery's in a little more than a month, but I have to give me a little bit of time to process them, and then we have to get in line to be eligible. And I don't know exactly what that process, I would imagine we can't get it in there at 11 o'clock at night, the night before, and still be eligible for the lottery. So just to be safe, probably by the, third week of March, you should
Okay.
be pretty well down the road of your application.
Well, thank you so much.
Just thank you,
If
Bill.
anybody has any questions, please reach out.
Sounds good.
Thank you.
828-2455.
Yeah, that's right. Thank you.
You're welcome.
Bye, Bill.
Bye, Mr. Bill.
Bye.
All right. I will go ahead and share my screen and also do a quick run through of the data that our local association puts out for different cities in the East Bay. And you may have noticed our teammate Margaret is not here, but she is moving, so just within the Bay Area. And so she will join us next week, but she's got a big moving day tomorrow. Okay, so here we go. Starting Fremont. It's interesting, just a quick overview. Fremont and Pleasanton and Livermore show an increase in prices, and everything else shows a decrease. So I think Louise can definitely give her opinion afterwards. It may just kind of be the seasonal trend. But anyway, we'll kind of focus on what we're seeing with the prices. So again, Fremont shows definitely an uptick from December to January, with average and median price coming up. Hayward, on the other hand, showed a sharp decrease from December to January. And Castro Valley, the same thing. San Leandro, slight uptick. Alameda definitely showed the downward trend from a million. It was like over 1.3 million to 1.098 million. So definitely quite a drop. Oakland, same thing, a definite decrease in both median and average sales price from December to January. Same thing with Berkeley. Same thing with Lafayette. But then we move over to the Tri-Valley, and Pleasanton shows like the opposite. Definitely an increase from December to January, and Livermore, same thing. So I don't know, Louise, do you have any thoughts or words of wisdom with what you see going on in real estate over this past month?
It's a tricky one because we had our house in Union City, and I think Katie listed it at a pretty fair price of what was happening there for the size. I think it was 1,190,000. And at the end of the day, when the offers were due, we ended up with 7 offers, and those 7 offers brought it to above 139 or something like that. Which was pretty amazing. So that's an example where people went aggressive and with 7 offers. On the flip side, if there's a house, like we have a client who's in escrow buying a little house in Oakland, and he was the only offer on the table. So it's kind of like opposites. So if the house checks all the boxes and it's like everything that people want in the area, the location, the sizes, the amenities, I guess it'll go crazy. The school district. But then if you have something that's been sitting on the market, you have the opportunity of being like our buyer, and he was the only offer on the table, and he was able to negotiate 10 off the asking, credit of 10,000 for closing. So I can't say it's like the perfect storm because, I'm sure the people over here with the 7 offers were all like frustrated. So it's kind of a quandary.
Yeah, I think, always, I guess from the buyer's perspective, trying to look at the homes that may have been overlooked, because maybe you can get a good deal because they've lost the interest. Because the most interest people, for homes is within the first 2 weeks. After that, it can definitely start to go down. And so it's really important to have it priced correctly. And actually, interesting enough about the Union City home was that it didn't appraise because prices had been down over the past few months, and now we're definitely seeing an upward trend. And so it'll be interesting to see what the February's numbers are, I think in general, there's definitely a seasonal lull, and especially after Super Bowl, a lot of buyers, a lot of sellers, they start listing, they come back out and get really serious with whether either selling or buying, and just overall prices go up. So it'll be interesting to see if February has a different number. You know, if so many of those cities we saw numbers going down, and there's only a few that were already going up. So it'd be interesting to see if we see more of them actually coming back up. But at the same time, as Bill mentioned earlier, with interest rates coming back up, and why they were initially projected to go down in May, which a lot of people were waiting and hoping for, that's definitely going to, might change people's decisions on whether to wait till then. They might come on sooner or just hold off for longer. So it's going to be a very interesting year to see how things shake out, because interest rates are still high, and that's forcing a lot of sellers who may want to downsize or move up, but don't want a much higher interest rate if they're only at 3% to just sit. So that's definitely going to keep inventory down. So it's mixed, because interest rates are up, which makes buyers afford less, which would put prices down. But because inventory is down, it also, there's these conflicting trends. So it'll be a very interesting year to see how things continue to progress.
Right, and the other thing with that is, if you went back to your sheets, it shows that the inventory is down. And so the inventory down, I think that's what happened with the Union City home, is that, the buyers really want, it had all the check boxes marked. And so with inventory down, it's kind of making some houses go pretty crazy.
Yes, yes. If they can check the boxes and they're not been sitting there for a long time, definitely had a good amount of interest. So I think that's all I have, unless you have anything else to add, Louise.
No, it's hard to believe, but it's almost the end of February. Soon it'll be March next week. So anyway, thank you everybody for listening. And who knows what March will bring? What is it? March Madness or something? I forget. Anyway, thank you everybody. See you later.
Bye.